So we are now in our second lesson, the macroeconomic circular flow diagram. You have learned in your BA 200 the circular flow diagram, right? But it was a two-sector economy wherein it's only the household and the business sector being discussed. Now, for the macroeconomic subject, we're going to tackle the three-sector economy and the four-sector economy so that you have a broad understanding on how the economic flow of a certain economy plays and interplays. So for the objectives, be familiarized with the basic concept in terms of economics, be able to illustrate and demonstrate the circular flow of the economy. So you have to have, or you need to be able to illustrate and demonstrate the circular flow, internalize the sector of the economic flow. So before we go to the circular flow, let's first understand the basic terms. So for the definition of terms, circular flow of economic activity is defined as it's a model showing the basic relationship within a market economy. It shows where the money goes and what it exchanged for. The model includes the household, business, government, the banking system, and of course the foreign exchange. The banking system facilitates the exchange of money and helps to productively turn savings into investment in order to grow the economy. Of course, the money is used to purchase goods and services and the factors of production. So, these are the factors of the production: land, labor, capital, entrepreneurship. The prices that correspond to these factors are rent, wages, and profit. Now we define macroeconomics. Macroeconomics deals with the behavior of various economic variables that refers to the economy as a whole. These variables are total national income, aggregate employment, the extent to which the economy's resources are being fully employed, aggregate saving and investment, and the general price level in the economy. So, the players of the economy: the household, the business, and the government. The household buys goods and services from business in attempt to satisfy their unlimited needs and wants. So these unlimited needs and wants is already discussed in your microeconomics. Households sell their labor, land, and capital in exchange for income that they use to buy goods and services that firm produce. Actually, these are somehow the simple explanation on the circular flow later. So the businesses sell goods and services to household, earning revenue and generating profits. They also pay wages, interest, and profits to household in return for for the use of their factor of production. And of course, government, sorry for the wrong spelling. But anyways, they levy taxes on households and businesses in order to provide certain benefits to everyone. So for the next slide, we are now going to tackle the circular flow in a three-sector economy. And after this, there is also a slide for the fourth sector. So now we discuss the three-sector economy. Oh, sorry. The three-sector economy: the government, the household, and the business. From the two-sector economy in your microeconomics, I believe you already know the basic concept, right? So, as you look at the circular flow between the household sector and the government sector. So, taxes in the form of personal income tax and commodity tax paid by the household are outflows. These outflows are sometimes called leakage from the circular flow. But the government purchases the services of the household, makes transfer payment in the form of the government expenditures in the form of pensions, unemployment relief, what we have been experiencing, the SAP during the pandemic, the what else? Sickness benefit, field health, and medical, among other government expenditures. And also, they spend, the government spend certain social services like education, like free education, free housing, water, parks. If you have visited the in the capital of Negros Oriental, Dumaguete, there's actually a ongoing construction in the Boulevard area that is for everybody's use. Those are part of social services that the government spent, and among other facilities that the government spent. All these expenditures by the government are called inflows or injection to the economy, or injection in the circular flow. And then next is take the circular flow between business sector and the government. So business sector and the government. As you could, a while ago, the household and the government. Now we go to the business sector and the government. So this is what happened. All types of taxes paid by the business sector, to the government are leakage. Guys, taxes from household are also leakage. Taxes from business sector are also leakage. Remember that. So leakage from the circular flow. On the other hand, the government purchases all its requirement of goods of all types from the businesses. So the government purchases its goods from the businesses. Gets that? This gives subsidies and make transfer payment to firms in order to encourage production. So government buys from the business sector to encourage production. These government expenditures are injection into the circular flow. So like the expenditure of the government to the household for social services and among others are injection, the same. It is still an injection when government sector spends to the business sector. And then now we take the household, the government, and the business sector together, all of this. This sector together to show all of this show their inflows and outflows in the circular flow. You already know that taxes are leakage from the circular flow. Taxes tend to reduce consumption and savings of the household sector. So taxes are leakage, and this reduce consumption and savings of the household sectors. Reduce consumption. So because of the tax, reduced consumption in turn reduces the sales and income of the firms. So when the households do not buy much because they have to pay taxes, this also reduces the ability of the firm to produce, and because of their inability to produce, sales will decline. So that is what happened actually. And then on the other hand, taxes on business firms. So first, taxes on household. Now, taxes of business firms tend to reduce their investment and production, like I said, because there's no consumption. So why are they going to produce? And because of these taxes that the business sector pay to the government, this also reduces their investment and production because they have to think that they have to pay tax. So in order to do this, the government, in order to make amends, the government offsets this leakage. Taxes are leakage, right? This leakage by purchasing from the business sector. So now in order to minimize this leakage or the production, in order for the household to consume more, the government makes purchase from the business sector and buying services of the household sector equal to the amount of taxes. So, do you get that? In order to balance it off, the government buys what they produce, what the business sector produce. And to balance that with the household, the government buys services from the household. What are these services? They are the factors of production, right? So the government spends on social factors. So that there's an injection. They spend on building of infrastructures that creates employment. So these figures shows that tax flows taxes flow out of household and business sector and go to the government. Yes, every taxes that we pay, your parents pays, the government pays, goes to the government. The government purchase goods from firms and also factors of production from the household, like I said a while ago. Thus, the government purchase of goods and services are an injection in the circular flow, and again, taxes are leakage in the circular flow, but they have ways and means to balance it out. If the government exceeds net tax, let me iterate that. If government purchases exceeds net tax, then the government will incur a deficit equal to the difference between government expenditure and taxes. So, if the government buys too much from the business sector, then what they have get in terms of tax, both from business sector and the household, they will have a deficit. The government finances its deficit. So, deficit means not enough. When there is a deficit, the government borrowing from capital market, so either from banks and other financial institution, which receive funds from the household sector in the form of savings. So this capital market, where do they get their funds? From the household in terms of savings, so this capital market, and also from the business sector in terms of savings. And again, the flow continues. However, on the other hand, if the net taxes exceed purchases, means the government purchased less compared to what they have earned in terms of taxes, it will have a budget surplus. It means they have more surplus. It means more surplus. So what happens to this surplus? In this case, the government reduces the public debt. It means if there is a surplus, the government can pay what they borrow from the capital market, right? And which are received which they receive from the business sector. So if there is deficit, if there is deficit from the government sector, they borrow from the capital market. If there is surplus, they pay what they have borrowed from the capital market. And of course, the cycle continues. And that is a three-sector economy. From the three-sector, now we include, actually, in the four sector, these three, government sector, household, and business sector, are still included in the four-sector economy. So the four-sector economy includes the foreign sector. And almost every country in the world are in a four-sector economy. So this is the sector economy. Here, as you can see, these are expenditures. Exports. Where's exports here? In the foreign sectors. Exports. Exports are injection or inflow into the circular flow of money in the economy. On the other hand, imports are leakage from the circular flow. So exports are injection to the economy. Imports are leakage from the circular flow. They are expenditure incurred by the household sector to purchase goods from foreign countries. These exports and imports in the circular flow are shown here. So let's take the inflow and outflows of the household, business, and government sector in relation to foreign sector. So the three: business sector, government sector, household sector. The household sector buys goods imported from abroad and makes payment for them, which is a leakage from the circular flow. The households buys from foreign sectors and then pays the foreign sectors. So this means this is a leakage. The household receives transfer. So sometimes the household, let's say still go to the household. The household receives transfer payments from the foreign sector for the services rendered by them in foreign countries. If the household renders service to the foreign sector, especially now we have BPOs, they rendered in the foreign countries. On the other hand, that is for the household. When they buy imported goods, they pay. When they give or provide service, they receive transfer payments from foreign sectors. And now the same goes actually to business sectors. Some business sectors rather export goods from current countries. So they buy some of their factors of production, like components of their production, from a foreign country. And the receipts are the injection in the circular flow of the economy. The receipts. Similarly, there are many services rendered by business firms to foreign countries. So also, when business sectors rendered services to the foreign country, like shipping, insurance, banking, and among others, for which they receive payments from abroad. So now that is what you call export transfer payment when they receive it. Sometimes the businesses also receive royalties, interest, dividends, and profits for investment made in the foreign country, because some businesses invest in foreign country. On the other hand, the business sector makes payment to the foreign sector for import of capital goods. So when we buy something outside of the country, like capital goods, machinery, raw materials, consumer goods, and services from abroad, these are leakage from the circular flow. When we buy a leakage, when we receive something, that is injection. Like the business sector, like the business sector, modern governments also export and import goods and services. And of course, lend to and borrow from foreign countries. You have also probably heard from the news that the Philippines is borrowing money from this country and among other countries, so that there is an injection to our economy, right? So the government export goods and services, and they also receive payments from abroad. So it's the same concept. Government receives payment from foreigners when they visit the country. That is the tourist, right? When they visit our country as tourists or receive education from our country, so we receive payments from them. And also, when the government provides, it is the government that provides shipping, the government that provides insurance and banking services to foreigners, to the state-owned agency, or the government and owned and controlled corporation, we receive payments from these foreign people. And of course, the government also receives royalties, interest, just like the business sector, dividends, among others, for investment made abroad. If you might think it is only the business sector that invests outside the country, think again. The government also invests in other countries. Okay? These are injections. The royalties, interest, dividends received are called injections in the circular flow of money. On the other hand, the leakage, leakage are always payments, guys. Leakage, tax, and the likes. Leakage are payments made to foreigners for the purchase of goods and services. So if it is a government who purchase goods or services outside our country, it means it is already a leakage. This circular flow of money of the four sector economy with saving, taxes, and imports shown as leakage from the circular flow on the right side of the figure. So savings, you can see that savings, taxes, leakage. They define this as leakage. And of course, imports. Why imports are leakage? Because we are paying them when we import something, right? Are called leakage. Have you seen that? I believe you can identify that. Savings, taxes, and imports. So it is in the right side of the figure. And investment on the left side, investment, government purchases, and export are the injection in the circular flow, and that can be seen on the left side. These are injection on the left side, leakage on the right side. Furthermore, imports, exports, and transfer payment has been shown to arise from the three domestic sectors: the household, the business, and the government. These outflows and inflows as through the foreign sector, which is called the balance of payment sector. The balance of payment happens, or there is balance of payments if export equals import. There is also what you call deficit if we buy more, we import more than we export, because we are paying in the currency where we, or for the universally accepted currency, the US dollar. If we buy more from other countries than we sell to other countries, then there will be imbalance of payment. There is no balance of payment. That's why it is the goal of every economy to have balance of payment. So that, I hope you understand the four sector economy.